Hey folks, my guest today is Gareth Hewitt. He's a technology professional with over 20 years of financial services software experience. His experience with the current legacy system approaches to data integration, customizability, modeling, complex accounting, and others show his and demonstrate his belief that there's a deep-rooted need for a powerful modern development platform with integrated accounting in financial services. That's why he's building lemonedge.com. Gareth, you ready to take us to the top?
Yep.
All right. So were you like a CFO at a company or something? How did you really get familiar with this pain point?
No, it comes from a technical background, working in financial services in four different companies over the prior 20 years, building out partnership accounting systems. So each time, we started from scratch, built it again, and kind of iterated that design over the previous 20 years and got to grips with all of the problems in the industries and the complexities as times change. And so have a modern solution to that.
And so today, can you maybe share some of the customers that are paying for your platform? Is there a specific niche or is it really for anyone?
So really my background is within private capital, so private equity, fund administration, venture capital, etc. And what we did with Lemon Edge is instead of building a private capital solution from the ground up, we started with a low code development platform for financial services. And then we used that to build our private capital solution. And really that was mainly for any implementation of these types of products. Clients build lots of proprietary systems around them. And so this platform enabled them to do that. But also it was because the story of there being 20-year-old legacy systems that do the back office accounting in private equity isn't just restricted to private equity. It's the same in insurance, it's the same in syndicated loans and credit derivatives, tax modeling, etc. So by starting with that low code platform that did the GL for back office accounting for complex transactions in lots of different legal vehicles, it meant that we could take the platform and move it across financial services.
And so today, what are customers paying on average per month or per year to use Lemon Edge?
I mean, it really depends. It's a subscription based product. It's not SaaS. Like most of our clients are large currently because we're selling within private capital, are large billion-dollar firms. So they are paying a yearly license. It's not like per month or anything like that. But
That's
it
fine, but
ranges.
I'm just trying to get a sense. Are we talking like $100,000 a year or like $1 million a year?
We're talking in the $100,000 plus range.
Okay, got it. So something like $100,000 per year. And why would someone? What enables you to sell someone 100,000 bucks a year versus 500,000 bucks a million, $500,000 a year? Is it AUM under management or what's the utility based upsell?
That's the way it used to be. I think that a lot still kind of stick to that. It's not obviously favored by our clients. We tend to do a user based approach, but that also ties to complexity. So depending on the simplicity of the fund or the complexity, number of investors, number of entities, complex transactions, etc., kind of have a matrix. But it's really about tying the software to the value that the company's getting back.
I guess that's why I'm asking, right? Is the value tied to AUM managed, number of users, number of LPs in the fund, number of transactions? If you had to pick one that was the most meaningful in terms of capturing value, which one would you say it was?
I mean, that's yeah, like I say, it's a matrix of those things. It's not AUM, but it will be because you could have a big fund that's pretty simple in terms of how it runs. You could have a small fund that's got a hybrid fund across special credit or debt with lots of investors that's intensely more complicated. So it's really that gauges it more than the size of the fund does.
Understood. Okay, but customers again paying minimum 100,000 a year, maximum maybe five, six, 700,000 a year, depending on how
Minimum
complex.
can be lower than that, but I would say on average it's probably 100K plus.
Okay, fair. Oh, what's going on there, YouTube? Good to see you guys. Now imagine this. You love watching these interviews with SaaS founders, but imagine if we took all of the valuation data out from over 2,807 interviews I've done manually. Saves you a lot of time. Well, we've done this. We've built it into the beautiful interface inside of FounderPath. Check this out. I'll show you how you can access this in a second, but you log in, you connect your Stripe account, you see your valuation real time. You can see what it changed over the past 88 days and even set goals for valuation this year. Now, the secret valuation is there's many different ways to value a SaaS business. So the reason you're going to see 3 or 4 different valuations inside of your Founder Path dashboard, this is all free by the way, is because depending on who's doing the buying of your SaaS company, you're going to get a different valuation. A VC is going to pay a different valuation. Private equity firm is different. If you're going to do a minority sale, that's different. And if you sell the whole business, that's a different valuation. You can see all those when I hover over here. Right. So the teal is what a VC would pay. Yellow is what private equity, and red is if you sold the whole thing outright. Now, what's cool about this is not built off random data. Again, you guys hear these interviews on YouTube. All these data are built from real-time valuation data points founders share with us on the show. So traction, 1.2 million, seed round, 3.7 raise. They sold 22% of their business. Go in here and filter by the event. Maybe you only want to see companies that have sold the whole business. Well, here are a bunch that have been acquired, the valuation and the multiple. Maybe you're going out right now and you're raising your seed round. Well, go in here and look at all this recent seed deals that went down, what they raised, what valuation they raised at, and what percent that they sold. There's never been a larger data set of SaaS valuations than what you can get now inside of Founder Path, and we're thrilled to bring it to you. All right, we're going to go back to the YouTube video here in a second, but if you want to check this tool out, if you want to jump in and sign up, you can check it out for free to get your valuation at this link, founderpath.com/products/valuations. Or if you go to founderpath.com and hover over products, click on get your valuation here and go ahead and sign up to give it a whirl. Again, all that valuation data live right inside the platform. I hope to see you there. All right, let's jump back into the interview. Put this all on a timeline for me. When did you write the first line of code for the platform?
We started in literally as soon as the world locked down in COVID. So I think that was March 2020. So I just came back from New York to London to start the company, and literally like 3 days later, everything shut down.
Geez. Okay, so 2020. And have you bootstrapped today, or did you decide to raise capital?
We raised capital towards the end of 2020 when we launched the product. But up until that point, so for the first like 9+ months or whatever, we were doing it ourselves. And, the whole world was locked down. So actually working out of our bedrooms wasn't a disadvantage at that point. Everyone else was. But then, we raised capital when we started going to market at the end of 2020.
And how much did you raise in 2020?
So we raised just over $2.5 million from a VC out in New York with two strategic investors alongside. One, Tico Bernstein, who did Parse.com and Scribe.com, and the other being Lauren Lysovich, who was the founder of InvestRan, like one of the competitors in private capital. And that was led by Sidekick, the VC firm out in New York.
So 2.5 in 2020, that's all you've raised to date, right? So being capital efficient?
No, it's not. We raised that at the beginning of 2021. And that was to bring on board the senior leadership team, build
Sorry, Gareth, just to be clear, you raised 2.5 million in 2020 or 2021?
Beginning of 2021, sorry, end of 2020, beginning of 2021. Sorry.
Okay, got it. And then it sounds like you did another round after that?
Yeah, so as we brought on the team, it takes about 9 months to make an enterprise sale. So when we got towards Q4 of last year, we started talking to some firms who were interested in our product. Blackstone was one of them. We did a proof of concept with them. They were incredibly impressed with what we could do. And so we saw the ability to extend that seed round to bring them on as a partner. What we've been looking for is always strategic partnerships, not necessarily the cash. And Blackstone is obviously an enormously valuable name, and they have a huge amount of experience across asset classes, which can help us in the product. So we extended that for $4 million, just over $4 million, so a total of about close to $7 million for the end of that for the entire year.
Mm-hmm. And how did you deal? I mean, obviously you grew between the end of 2021 and when you just let people put in 4 million more. Did you just do that as like a rolling safe and you just increase the valuation for the second tranche, or how did you structure that?
Yes, we increased the valuation, but to let Blackstone in as like an extension to that seed. Yeah.
I see. But all on convertible notes, or have you actually priced the business yet? Priced equity?
No, it's all on preferred shares.
Oh, okay, got it, got it. So I guess would you consider that 4 million then like your seed round effectively?
Yeah, exactly.
Yeah,
That's
yeah,
that's
okay. And then most are selling sort of in their seed round, anywhere between sort of 10 and 20% of the business. Were you sort of in that same range?
about that. Yeah.
Okay, fair. So that would have been like you raised it like a 40 million valuation, something around there.
Uh, well, no, because we did it in like two stages, right? We had the initial tranche and then the second tranche with Blackstone coming in. But
Oh,
yeah,
so the full 6.5 million you sold somewhere between 10 and 20%.
total. Yeah.
Oh, I see. I see. Got it. Got it. Got it. Okay, very cool. And then I guess flesh out more of the team, sort of the team for me today. How many folks are full time?
Well, everyone. We have
I know. I don't know how many everyone is.
yeah,
What's the team size?
we had uh, we had 15 at the beginning of this year. We've doubled that in the last 3 months to about 30, 32. I think we've got a couple more coming on.
And how
So
many are full time engineers?
I think the development team is six right now. It could be seven.
That's very small, actually. I was expecting you to say way more, considering how engineering your pitch heavy your pitch is. Why aren't there more engineers?
I think that's because it's been my experience and my background is developing these types of products. Is that I think we focused on hiring like really good developers. We have a test that we think is really good, and pretty much I would say 85-90% of people fail. And it's been my experience in the previous companies I've worked with. The products we've achieved with 4 or 5 people, and then move to competitors that have 80 people and achieve less. Like I think most people in the industry, senior developers and stuff that we hire, that we look at, aren't good developers. But there's so many out there, people don't know that,
Understood.
so they
Yeah. So
build
you
a
lower
team.
amount, higher quality, more SWAT team
Yeah.
approach versus Army makes sense. How many customers are you now serving today?
Right now, there's five,
5K.
and another five that we're on in the process of closing,
And then, so is it fair to say five paying that average ACV you said earlier, about 100 grand, you're about a 500,000 run rate today?
roughly.
Okay. Can you break 1 million this year, you think?
We aim to do more than that.
Mm-hmm. And if you're at a 500,000 run rate today, where were you exactly a year ago? Do you remember?
Well, we only started getting the first set of clients in Q4 last year.
So you had no
Um,
revenue a year ago.
yeah, essentially, yeah.
Yeah, yeah. Okay, very cool. This is great. And do you think most of your growth this year will come from expanding on these first five customers or adding brand new customers altogether?
Both. I think a lot of the clients that we onboard will want to do further work and expand what they do, particularly because we have a platform. But we obviously aim to bring on a quite a number of new clients too.
Hmm. And how are you finding these clients? I mean, do you have a head of sales that does this, or is this really you and your relationships from the hedge fund world?
No, I started the company back in 2020 with my co-founder Jamie. His background is sales and marketing, so he kind of heads up that. But a lot of our initial sales are from my background and Lauren's background, who's the co-founder of Investran, and our implementation
So,
team's
Gareth, sorry,
background
just to
as
be clear,
well.
there's three co-founders.
No, just myself and Jamie. Sorry.
Who's Laura?
Lauren is the one of the investors we brought in at the beginning of
Oh, I
2021. So she's the co-founder of Investran.
got it. Okay. But you and Jason, did you guys just split 50-50 at the beginning?
No, Jamie, I brought
Oh,
on
Jamie.
board.
Sorry.
So I wanted someone who didn't have experience on selling in private equity, but could target more financial services as a whole.
Got it. So you own a little more equity than Jamie because you started it.
Yeah.
I see. Okay. Very cool. Let's wrap up here with the famous five. Number one, Gareth, what's the last book that you read?
The last book that I read, it was a long time ago. It's probably some space epic, but I can't remember if I'm totally honest with that.
Space Epic. We'll put that in. Number two, is there a CEO you're following or studying?
I don't
Okay. That's a
know.
none. Number three, what's your favorite online tool for building the business?
Favorite online tool? I would probably say we use Teams a huge amount,
Microsoft
just
Teams?
because everything we've done has been virtual. We hired everyone virtually.
Gareth, what we don't know what Teams means. Microsoft Teams or what?
Yes, sorry, yeah,
Okay,
absolutely.
got it. Number four, how many hours of sleep do you get every night?
Between 4 to 6.
5 hours. That's not healthy.
It's not healthy. Most of the times I get 6.
All right, fair enough. And what's your situation? Married, single, kids?
Married, 1 kid,
One kiddo. Okay, and how old are you?
40.
40. Last question. Something you wish you knew back when you were 20.
Start companies earlier.
Guys, like a good entrepreneur, lemonedge.com. Again, really selling into these big, funds, hedge funds, pension funds, etc., helping folks understand and do fund management. He really prices against, number of users, number of LPs, number of transactions. How complex is the fund effectively? Launched back in 2020, he's raised 6.5 million to date, sold between 10 and 20% of the business. Looking to scale now, 32 people full time, 6 engineers. Again, 5 customers right now, about a $500,000 run rate. Looking to more than double that this year. We'll see what happens. Gareth, thanks for taking us to the top.
All right, thank you.
One more thing before you go. We have a brand new show every Thursday at 1 p.m. Central. It's called Shark Tank for SaaS. We call it Deal or Bust. One founder comes on, 3 hungry buyers. They try and do a deal live, and the founder shares back-end dashboards, their expenses, their revenue, ARPU, CAC, LTV, you name it, they share it. And the buyers try and make a deal live. It is fun to watch every Thursday, 1 p.m. Central. Additionally, remember, these recorded founder interviews go live. We release them here on YouTube every day at 2 p.m. Central. To make sure you don't miss any of that, make sure you click the subscribe button below here on YouTube, the big red button, and then click the little bell notification to make sure you get notifications when we do go live. I wouldn't want you to miss breaking news in the SaaS world, whether it's an acquisition, a big fundraise, a big sale, a big profitability statement, or something else. I don't want you to miss it. Additionally, if you want to take this conversation deeper and further, we have by far the largest private Slack community for B2B SaaS founders. You want to get in there. We've probably talked about your tool if you're running a company or your firm if you're investing. You can go in there and quickly search and see what people are saying. Sign up for that at nathanlatka.com/Slack. In the meantime, I'm hanging out with you here on YouTube. I'll be in the comments for the next 30 minutes. Feel free to let me know what you thought about this episode. And if you enjoyed it, click the thumbs up. We get a lot of haters that are mad at how aggressive I am on these shows, but I do it so that we can all learn. We have to counter those people. We got to push them away. Click the thumbs up below to counter them and know that I appreciate your guys' support. All right, I'll be in the comments. See ya.